All right, all right. First week in November. Can you believe it? CJ, what'd you do for Halloween? I hadn't,
You know what? We actually had kids that came by and got candy here, Tom. I couldn't believe it.
yeah,
So, and they braved the snow. We had snow on
I was gonna
Halloween night.
say,
Yeah,
you got like winter warnings, winter storm warnings up there.
yeah, absolutely. The
Yeah,
the season
I
has
was looking at
changed.
the radar. I saw all that light green that went. I mean, it went from Georgia all the way up through you, and then up into New York. I think
Yep,
part of New York got it too.
yep.
Wow.
So, yeah.
I gotta go to New York. Um, I got to go to New York in a couple weeks. We've got niece, my, I guess you call them grandnieces. I mean, grand nephew, grand niece, 1 year old birthday party.
uh,
Woo! They won't even.
oh,
They don't know who I am right now, and they're not going to remember me. But you know what? It's the parents that remember if you don't show up.
that's
So
right.
my wife and I gotta, jump on a plane, get to New York for a couple of days. But yeah, we were just talking about that. We're saying, what's the weather going to look like? And we're looking, and we're like, ooh, it's already freezing. It's already below 32 degrees up there. And I'm thinking, man, Floridian like me, my blood is thin. I'm going to have to find, I've got to dig through my closet to find something we just don't wear down here. Coats.
Yeah, layer up, Tom. Layer up.
Yeah. So hey, you know what the first week of November also is? It is a new month. We have some new seasonals we need to talk about. Fed meetings out of the way. We got some, the last couple weeks of earnings. So the retailers are all going to start coming out. We're going to hear about retail, and I'm not talking about retailer e-commerce. I'm talking about the bricks and mortar guys.
That's
They
right.
still have to come out, and a lot of them have to report. But now we head into holiday season. I mean, you think about this. Everyone says, well, the holiday season doesn't begin until after Thanksgiving. Huh, what rock have you been hiding under? Because
Yeah.
the holiday season, in my opinion, it began over a month ago when I started seeing Christmas trees going out at the end of September and being displayed in the big box stores. And that brought, even my wife said to me, she goes, when should we put our Christmas tree up? I said, now. I said, I hate, but don't you hate putting it up and then taking it down like a month later? I said, this
Yeah,
way
you
we
know
can
what?
put it up and we can leave it up for 2 or 3 months.
Let's
Because
go let's go personal here, Tom. Are you an
yeah,
artificial tree guy or are you a live tree guy?
absolutely artificial tree.
Ah, I am still old school. I still go out. I think 2 years ago, I actually went out and cut it down myself, man. So, I
Now that
can't
sounds like Griswold. You're going to bring a raccoon or
that's
something with you, a squirrel
that's
that's living
exactly
in that
right.
tree.
You're
No,
right.
in fact, I'm full tech. We got LED trees this year. They're going to go
Oh,
outside where there's no branches, nothing. It's just the spiral, the LEDs. We'll put those out front. I got some LED trees for the inside of the house. I mean, literally just plug and play.
wow.
Is
Man, maybe
because
I need to get with the times here.
CJ, I got cats, and
Oh,
cats like to eat stuff,
yep,
and
yep.
they'll eat and they love the live scent, and they'll just be throwing up everywhere,
Yeah.
or dry heaving all over the house. We don't
Yeah.
need that. It's just one more thing you got to do.
Yeah. I don't know why I still do it, but I still go out and I get them, and I spend 2.5 hours putting lights on. But it's one of those things. You play a little Bing Crosby, you drink a little eggnog.
All
We'll
right,
see.
my friend. So, you know what? Before we get into November, let's talk
Yep.
about let's talk about October. And, we just, again, we have to chalk it up. It was another negative month, roughly. I mean,
Yep.
that's the third month in a row where
Right.
we saw August, we saw October, September, October, all down months. And we'll talk about what we think is going to happen in November. But, I almost think we've got to go take a look at the chart, at some of the charts just to get an idea. Because I mean, I'm going to show you guys based on the past. I'm going to show you guys some really, bullish looking stuff for November. But when you look at the trend of the market and you look at, a couple other things, and you want to discuss a little bit about bonds, I mean, it doesn't look that rosy. In fact, let me bring up a chart right now of the S&P 500, and here it is. And this is the end of July right here. So,
Hmm.
I mean, I got to tell you, it has been a while since I've seen short and long-term trends on the S&P pointing down. But that's what you see here, all right? I
Yeah.
put the all-in-one chart up so everybody can see it. And what we see is, you've got your candlesticks, which show the highs for the year up here around 460. Then, we had a lower high at 453, then 400, and it's just been lower and lower. The last time we saw a high, you've got to go back to the middle of October where we were kind of bouncing up around 435, 440 before we dropped to new lows coming into this week.
Mm-hmm.
Got a little bit of a bounce, but here's the thing. These things are all trending down. And I want to share something else with everybody too. I mean, the implied volatility, the options implied volatility has doubled in the last 6 weeks. We're now seeing options, that are twice as expensive. The time premium on options are twice as expensive now as they were about 6 weeks ago, but even 2 months ago. So it's, there's some nervousness out there. And the nervousness is, what is the Fed going to do going forward? What the heck is going on, in the Middle East? Is that going to calm down a bit? And of course, you've got all these all these underlying news stories that haven't even really become main news stories, like real estate. Is real estate rolling over?
Right.
Commercial real estate, unemployment. Is the Fed finally going to, take a good whack at the economy and kind of shut it down? And so these are all things that have to be talked about. But, if the market's going to be ahead of a potential recession, it's well underway.
Yeah.
And CJ, tell me, you know a little bit more about this than I do, but doesn't the market precede things by about 6 months on average? So if we are going to go into a mild recession, isn't that something that, if the market said back in August, hey, we're going into a recession, so we got August, September, and October out of the way. So are we talking about sometime before winter's over, 2024, that that we're going to feel it with the economy?
That's where you're starting to see some of the thinking lie right now, Tom. And you're right. The market tends to precede it, tends to lead us lower. The market's a discounting mechanism, right? We hear
Yeah.
that all the time. Some people don't know what it means. It simply means that the market prices things in before it happens. Now, you and I both know the economy is like the tortoise in the race. I mean, it moves slowly. The market moves fast, right? It's the hare. So the market's basically waiting for the economy to confirm it, even though it's starting to assume that, yeah, we're going to see a slowdown. But think about what we've seen in terms of the data here, Tom. The advanced GDP came out last week. It was stronger than expected.
Yep.
Jobs reports have been stronger than expected, stronger than, everything comes in stronger than expected. And yet the market is positioned from a sentiment perspective to bet on, the worst case in some degree. It brings the question, you and I both follow sentiment. Are we just getting ready to climb up one heck of a wall of worry right now?
Possibly. I mean, there's some numbers that came out that, well, Halloween's behind us, but the numbers that came out were that people are spent more money this year on candy than they did last year.
Mm-hmm.
And at first I thought, wow, the consumer is going to, load up those kids' bags with more candy. And then I'm thinking, wait a minute, we do have shrinkflation. And I mean, to me as a kid, nothing upset me more than those fun size candy bars because there was nothing fun about them. I mean, we like to go to the neighborhoods that actually offered the full size candy bars. And I remember I was looking at my niece lives in Alpine, New Jersey. All right. So
Okay.
Alpine, if you don't know about Alpine is the place that has no schools, doesn't even have a post. I mean, they don't have a postal run. If you want your mail, you got to go pick it up. You think, man, this thing's back in the 40s. These people are living like decades ago. But you know what else they don't have? They don't have the taxes that come with it. And the taxes, the property taxes on those houses in Alpine are ridiculously low. I mean, you wouldn't believe how low the taxes are out there.
Mm-hmm.
But that being said, these people have the houses, the prices to buy a house there because taxes are so low are ridiculously high. Those people in Alpine, you got to live with the Joneses out there, which means I saw what my niece was giving out for Halloween. It was all the full size stuff. It was, I mean, they took a shot of it and sent it over a group test. Unbelievable. And so, I mean, I look at that, I'm like, okay. But Alpine is not the barometer for the US. The barometer for the US is that, you know why they're spending more money? Because candy's more expensive. That's why. It's not because they want to be more charitable and give candy out to kids. Okay, fast forward. What's going to happen holiday season? Are we going to spend more money on Christmas presents, or are we going to spend less money on Christmas presents? What do you think?
I think we're spending less. I've got one stock that I watch, Tom, every season. From Labor Day until the day after Thanksgiving, which is what I designate myself as the shopping season. That's when you get a great seasonal trade for retailers alone. Best Buy. Take a look at Best Buy stock sometime. I think that is the canary in the coal mine for the retailers. Forget about Macy's. Forget about Nordstrom's. Restoration Hardware. Come on. Look at Best Buy because people love to buy PlayStations. They love to buy TVs. They love to buy, the games for the PlayStation. They love to buy computers, phones. You can get all of these things at Best Buy, including washer, dryer, refrigerator, microwave. If you're buying a house, you can go and get stuff from the Best Buy for your new house, or if you're moving into a new house. That's why I think it is the one best stock to watch in terms of the retailers. And when I watch that right now, BBY shares have been going down. We talk about discounting.
Oh, yeah.
They have been discounting a consumer that is not going to be going out and buying PlayStations and Xboxes and all that stuff. This stock, and I go back, it's not my own version of the money calendar, but it's one of those things where I have invested in the retail sector every year for about the last 20 years in terms of when I was managing money, everything. And
CJ, I got the chart up on the screen with us right now.
there you go.
This thing has not only followed the S&P, it pretty much has led it.
There you go.
An $85 stock that just bounced off 64 earlier this week.
Yep.
And so, I mean, that's insane. Best Buy is really predicting exactly what you said, that it's going to be a light Christmas this year. And, obviously time will tell, but these guys seem to be ahead of the shopping season. You know which one concerns me?
Which one?
Amazon.
Oh, yeah.
Because, the Cyber Monday, which is, we don't even say that much. Cyber Monday isn't a thing anymore. I mean, they called it that to get people to actually go out and buy online. What was it, 10, 20 years ago? Cyber Monday has become Cyber Every Day. There is no Cyber Monday to me.
Well,
but you take a look at Amazon, and I'm going to pump Amazon in, AMZN. We'll take a look at that chart real quick, and you'll see here. I mean, Amazon is on the rise because obviously they get a lot of their revenue comes from AWS. It comes from other areas other than just sending out packages. But these guys are, they're going to have to do some deep discounts. They're going to have to really price aggressively. They can't just put it up high. They're in the business now of raising the price so they can lower the price. I figured that out. My wife figured that out. Actually, she figured it out first and then told me. She goes, look at Amazon's Prime Day. You see these prices? These have been bumped up so they can discount them to show that there's a discount. There's no real savings in a lot of these areas. She figured that out. But, take a look and you can see here, Amazon is kind of trading in a channel, and it has been for months now, of around, that low is down there just below 120 with the highs up around above 140. We're in the middle of that range right now. But that's a heavy area. That 120 is a real heavy area. Yep. 120, 122 area of support that we break that. And I think Amazon could see par. We could be seeing $100 a share on Amazon, which isn't a crazy number because it was that cheap. It was in the 80s earlier this year.
85. Yeah, it was 85 last year.
Yeah.
You know what? one more stock here, and it doesn't have anything to do with shopping. And I love that you brought up Prime Days and your wife, because Prime Days, we talk about, the Cyber Monday and all of that. Well, Amazon has already done that. They've got 2 different sets of Prime Days every year right now. So they've already primed, pun intended, the pump in terms of the holiday sales on October 10th and October 11th by having that Prime. How many Christmas presents were bought on Prime Day? So, look, one more stock, Tom.
Yeah.
And it's not a retailer, but I think it has a direct reflection on the retailers, and that is Align, ALGN. This story got kind of brushed under the carpet last week. The company dropped more than 21%. This is the company that makes those, the clear braces that you can put. They're like retainers that we had back in the day.
Wow.
And the reason that I think that this has everything to do with what the consumer is going to be doing over the next couple months is that they are they're consumer discretionary. They're listed as a medical stock.
Yeah.
You choose to get your teeth fixed, right?
Exactly.
And this is an expensive way to do it, but it has been one of those stocks that when everybody talks, and if you look back at their earnings in July, everybody was talking about how strong the consumer was. Well, gosh, Align came out and said, hey, we're doing great. The consumer's great back in July. The stock went up, I think it was 12%. Last week, the company came out and said, oh, people are not using our product. And as a matter of fact, we're dropping our 2024 forecasts. Things are not looking good. And it is because it's a discretionary item, just like spending a couple $1,000 on Christmas. I think this stock is one that we'll be able to talk about in January and say, yeah, it identified a potential weakness in the buying habits for the consumer.
Yeah. Wow. That's amazing. I mean, there's a couple stocks out there that almost warrant the fact that there's some areas, some pockets in the market right now, which if you were looking at something like PE ratios, we're getting kind of on the cheap side with a few areas, but we're still what? I mean, average is somewhere around 12, 13. To get real cheap, you got to get down to 10. You got to get down 10, 11. And so, that would warrant that we still have a good, maybe another 10, 20% drop. If you're really going to see capitulation happen.
Yep.
I don't know if we see that or not, but it's interesting to look at for sure.
We're seeing some activity in these earnings reports too. We're about halfway through the earnings season.
Yeah.
You've got double the number of companies that are forecasting lower. They're actually guiding lower than last quarter. I think we were about 25% more companies guiding higher, and that's in the S&P 500. So you're seeing a shift in how companies are forecasting what's going to happen over the next couple of months here.
So CJ, let's switch out of stocks.
Yes.
And let's talk about bonds. And so I want to put a chart up of TLT, which is something everybody in here can chart. All you got to do is just look at this. If you're not a bond expert, TLT is the symbol you want to be looking at, because that is the iShares Barclays 20-year Treasury ETF. It trades like the bonds. And then if you can see here, again, the bond market topped out this year around 104. When you saw we saw the stock market kind of making its highs for the year back at this summer. Where were bonds? Bonds were above 100. 104 and then 102 when the stock market hit its high. Since then, bonds have gone lower, which really has driven the stock market lower. We're gone from 102 down to 82, 84. Here's another fun fact for you. If you go back and you look at the 5-year chart of TLT, it has dropped. It's had an absolutely incredible drop in its price. I want to say that it's dropped more than Bitcoin did when it retreated. So if you really want to look at something where people say, "Oh, there's safety in bonds," not if you're buying something that's marketable, that you could turn around. You're on the hook for if the value decreases. Yeah, you'll get a little interest rate, but that interest rate will not. Bonds are not a 20% interest rate to cover the drop from 104 down to 84. Just it isn't going to cover that, because at 104 we weren't trading at a 5% interest rate. We were trading somewhere in, I think, the high threes or early fours. And down here now we're trading above 5. But you could have been at 10% and you wouldn't have been able to capture. You would have captured maybe half the premium back on the drop. What's going on with bonds? Anything you want to add to what I just said? Take it away.
You know what? Bill Ackman famously closed out all his short positions on bonds last week, Tom. We all heard about that. I think you and I even talked about it a little bit. The other thing that I just looked at, open interest on the TLT for the January expiration, January 2024 expiration. You've got over 120,000 calls between the 90 strike and the 100 strike. And I'm not trying to get too technical. There's a real simple point behind this when I get to it. When you look at the puts for those same two strikes, it's less than 20,000 contracts that are open right now. Everybody is trying to call a top, or a bottom rather, in the bond market right now. They're trying to come out and say that this is done. There's a simple rule about that. When everybody's trying to call for a top in the market or a bottom in the market, it doesn't happen because they're expecting it. So I look at this and, obviously with the Fed comments about longer and higher and all of this stuff, the Fed's happy letting the bond market do the work right now. I think there's one number that investors can look at for the next month, let's say, and especially through November, and that is 5% on the 10-year Treasury. That is the yield. If we go above that, the TLT is going to take another dip lower. You're going to see us go down towards 80, maybe even a little bit lower than that. As everybody realizes, they give up, they capitulate even more and say, oh, maybe we're not. That 5% is a psychological level right now that is very important. And I think
if you're an investor, if you're a long-term investor and you do believe that we're getting to the end of interest rates, buying something like TLT might make some sense.
Right.
But you got to think maybe longer term. The other thing you could do is, something I do a lot of is sell puts.
Mm-hmm.
I'm a pretty big put seller. And so, that gives you the ability to lock in your price and get paid for it. However, I got to tell you, CJ, I've been wrong a few times in the last month on the put side. How can I not be with the entire market doing what it's done in the last couple of months? So you got to realize going in, that as a put seller, I'm what they call a cash secured put seller. That basically means that I make sure I have the cash in the account to pick up the stock. If I get put the stock, then I'm able to pick that up. So I don't leverage that. That way, when I get a drop, and I've had 2 stocks on me in the last month of October, I had 2 stocks that dropped on me pretty hard. One was Enphase Energy.
Oh, yeah.
I got put to that one all right. And the other one was Estee Lauder. Estee Lauder gave me a goose egg too. But that's the times when when you realize, you say, all right, you know what? There's no guarantee that every stock that I sell puts on is going to go sideways or up and just make me a little bit of money. Every once in a while, I'm going to get clipped.
Yep.
Well, this month, over the last month, I got clipped twice. Each wing got clipped a little bit, but again, it's okay if A, the risk going in, and B, you mitigate it as much as possible. And to me, mitigation of risk on short puts is just make sure you were going to own the stock.
Right.
You're able to take the stock, because if you're able to take the stock, you got plenty of cash in your account. And, when a stock dips and drops 20%, you see maybe a 1% or 1%, 2% move in your overall account.
Yeah.
That's how you mitigate risk in these uncertain times. You got something you want to say? I see your finger.
Yeah. You see me thinking here? Because
Yeah.
I want to ask you, and especially when you say the put selling, when you say put selling, and I look at the TLT at the money puts right now, Tom, and this is something that I hope most people understand, but I think you'll give it some words that'll help them out. So when I look at the TLT, the bond market, right? What's the bond market supposed to be? It's supposed to be safe. It's supposed to be less volatile. It's supposed to be all those things. At the money, implied volatilities for the TLT are right now at about a 20, a 21. At the money, and that's on the put side of the market. at the money S&P 500 ETF. So the spiders are trading at a 16. So you're 25% more expensive
On something that's supposed to be safer.
Huh?
On something that's supposed to be safer.
What boil that one down for me, because my mind just went like this when I saw those implieds.
Yeah. So, I mean, you look at both of these, and if it was an individual stock, I'd say, that the higher, maybe something might be coming into earnings that's forcing it higher, but this is the overall market.
Mm-hmm.
And so, I went out and I looked at, for instance, take a look at this. I'm going to throw it on the screen real quick.
Yep.
These are put options on TLT that expire in January. And I thought, if you really want to get some good money, go out and look at the Jans. And we're talking about, like, here's 85. These are at the money, so they're trading at $2.90. And you say to yourself, all right, well, what's $2.90? That's with being at the money, that's about a 4% return to take TLT at 85. So if it does go down to 80, yeah, that's going to go against you, but by how much? Really maybe about $2 if you're throwing yourself all the way out to January.
Right.
I mean, the 80 puts, they're giving you $1.16 right now to take the 80s, which give you a break even down in the high 78s. And I'm not gonna say it's something that's never happened before, because it has, but you got to go back. You got to go back to, like, the Clinton administration to see any real interest rates. I mean, yeah, you know what? Maybe right before 9/11, the interest rates were fairly high. But I mean, you got to go back to the year 2000 if you want to see any kind of interest rates that are higher than we are right now.
Correct. Yep.
The
Absolutely.
bond market's paying you to sell those, to obligate yourself at those ultra high interest rates. Really interesting stuff there. All right, so you know what? All of this sounds a little pessimistic to people.
Yeah.
So is there any kind of brightness on the horizon? And let's talk about that real quick. And so I want to share with everybody. Let's go ahead and look at the money calendar and look at the money calendar for November. So let me put that up on the screen for everybody to see. So the money calendar is just a calendar, folks. But what makes it different than any other calendar is I populate it with the most popular stocks. I run this back a minimum of 10 years. And what we're looking for is we're looking to see how many stocks have gone up or down on average 90% of the time in the past 10 years or more. And so what we're looking for is we're looking for seasonality. We're looking for patterns that happen over and over and over again. And as you can see, it looks like a calendar. But if you look at November 1st, I got 192 stocks out of all the stocks out there that we track. 192 of them have those 90% or greater patterns going on starting in November. Guess what? 96% of those are bullish. So let me click on that. Let's see what kind of stocks we're talking about. And so when I click on it and I look at the stocks, and then I'm just going to do a little bit of a stocks by, I'm ranking it stocks by how well they've done, that they've built upon whether they're going higher or lower. Lamb Research has a history of going higher during the first 2 weeks of November. Ulta Beauty has a history of going higher the first 2 weeks of November. Look, NVIDIA's on here. Finally, you got, you can see maybe a seasonal turn for NVIDIA. And then you got Estee Lauder on here. There's Boeing, Costco, John Deere, and then EFX. Those round out the top 10. So this is interesting to look at. Let me dive in a little bit deeper. Give me one of these stocks that you feel you want to see a little bit further research in, CJ. And I want you to think about the holiday season as well, and maybe that might help you make a pick. But which one of these do you want me to dive deeper into?
Well, if I think holiday season, I think retail, and I go straight to Costco.
That's where I thought you were going to go.
Yep.
And we haven't done this prior to the podcast, so we're all looking at this brand new. So I'm going to click on Costco, and what I see is a pattern between now and the end of November. And so that tells me that, we've got a trade length here of 29 trading days. And so, taking us all the way out to November 29th or 29 calendar days, excuse me. Let's see what else this shares with us. Look at, first of all, the data. 100%, 10 out of the last 10 years, that pattern has worked in the month of November. The run up to drawdown is 2-to-1, over 2-to-1. So it makes more money on the upswing than it has gotten going against us. Average trade has made $15.81 over the last 10 years. Now, this little pattern here, CJ, what this tells us is exactly what's happened since 2013 going all the way to 2022. You can see the last 3 years were 25 points during the month of November, 45 points during the month of November, 35 points. So the last 3 years have been phenomenal for this. And Costco, they've become, well, let's just put it this way. Mainstream media has promoted them more and more the last few years than they have back here in the prior years. I think that might have a lot to do with that run up. And then I can say, well, exactly what happened last year. So I'm going to click on 2022 and I can see, well, this is what happened. This pattern was around $500 to start. It went down to what, 477 or so, went against you. And then after the first week of November, just pretty much rocketed up and closed on a high note at the end of November. So what we do, folks, is we take this information, we say, well, okay, if we believe the seasonality is going to continue, we could buy the stock, or we could do some sort of bullish option trade around that to help us profit and create a lower risk trade with a higher reward, a higher return on investment as well. So what do you think about that, CJ?
I like that trade very much. Can you go back again and show the 2022, 2021, and 2022? So in the middle of a bear market, and I think this shows the power of that money calendar, Tom, you had a market that was flaking out in 2021, right? Remember, it was kind of popping out, and everybody was looking at what we now call the Magnificent Seven. But it was, at that point, it was just your Apple, Amazon, Nvidia, et cetera, et cetera. So in 2021, even when the market was trying to flatten out very hard, Costco still accelerated. I think that chart is powerful for showing the power of the calendar.
Yeah, I do too. All right. So as we end this week's podcast, do you have any new predictions going forward into November or December, or et cetera? What's your prediction?
I'm going to make a prediction that we can come back and revisit next week. I think, Tom, you've already mentioned the first week of November. I think that this market, between interest rates, between seasonality, between earnings season, how they're going to finish, between all of these things right now that are going on, I think truly that the first week of November is going to set the tone for the next, 6 weeks until we cross the finish line on December 31st, 2023. I do think that this market is literally just kind of balancing and trying to figure out. And that sentiment, I'll bring that word sentiment up again. If we don't get a rally that starts to kick off, because everybody's heard about seasonality, they've talked about it back here, the talking heads, if you will.
Yeah.
If we don't start to get some fulfillment of that, people are going to sit around and go, maybe I really shouldn't have bought ahead of this. And you'll see a little bit of a self-fulfilling move to the downside as people just get disappointed in waiting. So I really think this next week, I'm excited to talk about it next week, but I think this week is a biggie.
Yeah. Well, for me, I look at, I'm always looking at best and worst decisions.
Mm-hmm.
And I'm a rules-based trader, so I follow rules in good times and in bad. And so it takes away a lot of the, if not all of the emotion in trading. But it doesn't mean that I'm just going to be right all the time. I'm not. All right. But, I look at some of the put selling I did in the last month is, just a couple of bad apples, have spoiled the put selling a bit, but not that much. Best thing that I did was, and I said this, I think it was a couple weeks ago, was that as the markets were starting to make new lows, and I had done this months ago, is I converted a lot into fixed income, into things like SGOV. And I'm sure the big question is, well, when are you going to start converting back? And I have to wait for the Fed to tell me, not just one time. I need the Fed to tell me a little bit, but either that or I got to see some capitulation. I got to see, we got to go back. I want to see some market rollover like we did in March of 2020.
Yeah.
Then I start to look at that and say, all right, let me inch back in because now things are getting crazy.
I agree.
And even doing that, I know I'm not going to pick a bottom. It just isn't going to happen. But I want to put myself in a position for something that exceeds a day or a week or even a month.
Yep. I agree completely. Hey, next week, I'm going to set us up for next week here. We talked 2 weeks ago about gold and GLD heading towards that 190. Man, we're within a chipping wedge. So why don't we talk to people about that next week? Sound like a deal?
Let's talk about, let's do our whole podcast next week with commodities and crypto, because Bitcoin also has been hitting 35,000, hitting it. And I think we're about to close through it, and we're about to close through it and stay above 35,000 for a couple of days. And then we can see our sights on higher numbers with crypto. I'll talk about what I believe those numbers are as well.
Perfect.
And what I'm doing with cryptocurrency. So there we go, everybody. Thank you very much for Chris Johnson. I'm Tom Gentile. Hope you enjoyed our podcast. We'll see you again same time next week. Bye, everybody.